So I think you know who I am, David Morgan, founder of the Morgan Report. The title of this presentation is Resource Investing for Maximum Profits, Cambridge House, May 2018. Balance, something that nature preaches, balance in all things, including your investing. I strive to do that. Take your losses quickly, let your winners run, and don't be afraid to have cash. And going further on balancing your portfolio, you need to know your market. You want to buy the best. And we like to divide the portfolio into three aspects: top tier, mid tier, and speculative portfolios. The hedge fund managers that follow my work basically only stay in the top tier categories because we're talking about multi-billion-dollar companies where they can move in millions of dollars in and out and not really move the share price, whereas you can't do that in a junior. And it was easy to make money in the beginning of the cycle. I was here 20 years ago when almost anything that had gold or silver in the name took off. And a lot of them really didn't have much merit, but they had a lot of promotion. The sector was hot. Everybody was just throwing money at it. So whenever there is a stock, option, commodity, automobile, I mean, anything that has a high demand will move the price higher, whether or not it really has underlying value or not. Seeing that in the crypto space right now. So this is what happened. So a lot of people mistook their ability to pick junior mining companies, and they got that confused with the fact that it was a red hot market. And as again, to repeat myself, everything was moving higher. This is a presentation given, or a graph given by Pierre Lassonde, showing the discovery cycle. And I can see it. Oh, there it is. So this is all about speculative investments. And so if you buy low and it goes and has a discovery, it goes up like this. Well, back in the early days, like I'm talking, 15 years ago or so, they didn't even have to have a discovery. All they just had to have was a lot of buying, and it did this. If the discovery happens, it follows this yellow path. If the discovery doesn't happen, it shows this red arrow going down, and it doesn't go down far enough because usually it goes to zero. There's probably anyone in this room is probably familiar with a junior miner that they fell in love with the story and it actually went off the board. And that happens in this space. And that, again, is why you want to balance your portfolio and have some real stalwarts in there along with speculation. In other words, you want to balance the way you invest. So I'll just use one out of real life, but we had mines management from this spot here, and I had it at, I think, $1.29. It went to 10. I put a stop in at 8, and we got out. So most of my people made about 8 times on their money. And then it was a mine, but it followed this path. It got back down to about $1.29, and I thought I was repicking it right about here and expected this to happen. Well, it just basically went flat to down somewhat. It was bought by Hecla Mining, but the gain for my people visiting the same project for the second time was a minimal gain, like 30%, versus the first time when it was just a discovery project where it was about 800%. So there's a huge difference in the way you invest, especially if you're playing in the speculative space. So that's the way the Morgan Report starts out every month. And we really want you to do well. It's how you can build and preserve wealth for generations to come. We have a personal ideology that surrounds honest money in the financial system. You may or may not agree with that philosophy. You do not have to adhere to what my abilities are to pick natural resource companies that do well. And this is directly from the last pages of the report that hold the categories of stocks. I'm only showing the top tiers here. But for example, let's say that first thing to note is that most of these are streaming or royalty companies. Why? Why would I pick those type of companies? Those companies make money regardless of the price up and down of the silver or gold price. They get a locked-in profit. So if you want to make money in a sector, you should really dial in on what companies make money. You know, you don't want to get tied into some story or an ideology or a management team or anything else. Those are important, and they certainly are part of my thinking. But look, if we're mining gold, does it matter if the gold came from Uranus, the moon, Nevada? It doesn't matter. It's a commodity. It's called gold. It's on the periodic chart. It's been coveted by human beings as money for thousands of years. But what we want is a company that makes the best margin on it. And that isn't that hard to do. So that's what I did. So if you look at this chart, you'll see like Royal Gold is up 500%. Look at Wheaton Precious Metals up 433%. This is today. This is, I mean, we're still making money on these companies. Look at Pan American, 728%. Agnico Eagle, 440%. Now, if you look at something like, let's say, Royal Gold, I don't remember the yield on it, but let's say it's 1%. That's 1% based on today's price. But if you take it back by a factor of 5, which is what we've made on this stock, your yield is actually around 7%. So you're getting paid 7% on that stock just to hold it. And on these top tier companies like that, you can write covered calls and rent your stock to somebody that's anxious to make money on it and make about 17% a year. Options writers win 85% of the time. Option buyers lose 85% of the time. Do you want to approach it from being the bookie, or do you want to be the gambler? So there's lots of ways to make money in the top tier. That's why I have such a strong institutional / hedge fund manager following, because of my ability to look at the long game, buy these stocks at the right time, and hold them. I mean, the yields, like I said, are small based on today's price, but if you flip it back to when I recommended these companies, the yields are actually quite high. Does that make sense? Am I making sense out there? All right. Best bang for the buck. Everybody doesn't want to pay me, so just buy the books. Buy the books. I mean, you are going to get months and years of research. You're picking my brain. I hate that expression, but you're picking my brain for almost nothing. That book there, I think it's $20. You might be able to get it used on Amazon. I don't know. I don't care. That's a book that's more of an investor's perspective on how to keep your money this time, not give it back. Don't get duped by the stories. Be smart, be wise, invest wisely, make money, win, 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 and bow out gracefully if I'm wrong, and I do that. My masterpiece, whoops, what did I do? I leaned on the table too hard. There we go. That's my masterpiece. I owed it to the silver community. There's two chapters. There's several chapters. I love the book, but I'm touting myself, and I don't mean to. A lot of effort in that book, 9 months. There's a chapter in that book that talks about how we choose a mining company. Now, you'll read that chapter, you may not understand it. You would have to study that chapter. But if you study that chapter, you will know exactly how I look at a company and why I pick it. So if you want, again, and that's a $30 book, and I think you can get that used. By the way, here in Canada, you go to silvermanifesto.com. The book is $30, and it cost me $25 to ship it to Canada. I'm sorry, I don't make the rules. I'm not your government. I'm not your postal office. But I'm not going to take a loss on the money. I'll make my $5 on the book price, and that's what's going to come. But $50, $60 Canadian, you're going to have a textbook on how to choose a mining company. Or not, but you don't want to spend $500 to get my picks and the updates and the timing and everything that I do for you for that. You just want to buy the book. That's your best bang for the buck. You have to do your own homework, you have to do your own study, but especially if you have somebody in your family that really is interested in this industry, from the investment perspective, it might be a birthday present. I don't know. Why the final leg in this market will set a record. So this comes from shadowstats.com. How many are familiar with the name John Williams or shadowstats.com? Just a couple. So John took the 1980s metrics for defining inflation and kept that same methodology to current times. And based on those metrics, the inflation rates are extremely high relative to what we're told by the U.S. government presently. So based on that, silver's price is up in like the $600 range if it was adjusted for true inflation. Right now, we're at an extreme. You could see this spike that was the extreme the other way, which means that silver was extremely high and the Dow was extremely low. Right now, we have the opposite, where the Dow is extremely high and silver is extremely low. So if you're going to sell high and buy low, that would suggest one of the best trades you can make, especially in the futures market, is a spread. You'd want to short the S&P and go long silver, lower margins, and it's a safer bet. So that's a hint. But this is a chart I like. All the major markets go up in three phases. They go up substantially, like from $5 silver up to 21. And then you have the financial panic of 2008, and it goes from 21 down to 9. So that's one leg up and one leg down. And then it goes from the $9 level at the bottom when nobody wanted to buy it, and it was a V bottom, and people bought silver at 9. The retail price was like 13, and it goes from that level up to $50. And I called that top. I called the $21 top as well. I made every top call so far. Hopefully I'll get the last one. So you had a leg up from 5 to 21, a leg down from 21 down to 9, a leg up from 9 to 50, and a leg down from 50 to where we are right now. The next leg is called the fifth leg, if you count up, down, or the third leg up. The third leg up is notoriously the biggest leg in percentage terms and not that long in duration, which means you get it flying higher and higher and higher quickly. And that happens in real estate, it happens in the .coms, it happens in almost every market. So just because it's silver or gold or precious metals or resource stocks, it's not exclusive, it's a market fact. It's not a precious metals idea. And this is where huge amounts of money are made. And it's all ready to happen. I believe it will happen. I believe it'll happen within the next 5 years. But I'm also conservative. What I teach is put 20% of your money maximum into this sector, space between physical and precious metal stocks. The precious metal stocks outlined, as I said, like 70% into the top tier, 20% maybe into the mid tiers, and then 10% in the speculation, spread out between the 10 at the most that I have. And if you do what I teach, you'll do well. In fact, extremely well. So the reason for this curve is to kind of give you an idea of where we are in the cycle. So it's not a perfect one, but we've had the leg up, leg down, leg up, leg down, as I explained, and we're getting ready now. We're over in here to where we'll see this big, massive third leg up. Remember, there's an adage that there's no fever like gold fever. I believe that that's still valid. I believe it'll still happen. And I believe we're on the cusp of it happening. I look at this year to end on a high note, but not excessively high. If silver gets up to 20, I'll be very happy. I don't think it's going to do better than that. I'm not sure it'll make 20. But 2019, I believe, will lay the groundwork for a substantial move higher. And I'm looking for the blow-off top to happen somewhere between 2020 and 2021. And all that's predicated on a fundamental fact that no fiat currency has ever gone the distance. They've all failed. And right now we're in the process of watching the US dollar failing. It hasn't failed completely. And the reality is it never really fails completely. It's just that people lose faith in the currency. And once that happens, once it's lost faith, once it's lost trust, once the bond market starts to crash, there's absolutely nothing that the government, the markets, the financiers can do about it. So this is a phenomenon that's happened over and over and over again. In fact, going back to the Silver Manifesto, we have a chapter in there that shows all the currency failures that happened from 1990. And even though I wrote the book, I can't remember, but something like 31 failures since 1990, but you don't even know about them because they're obscure little countries that nobody pays attention to. And rather than go to gold, they go to what? The US dollar. They literally go to physical currency, U.S. dollar printed bills, and they trust that, as the whole world does, until it fails. So, interesting story. The last chapter is yet to be determined. Remember, in the last market, we had 90% of the move comes in the last 10% of the time. That's why sitting here now and being patient is probably going to pay off unbelievably strong if you're willing to wait out probably another 3 years. Silver went from the official monetary price, which is $1.29 an ounce, which I rounded up to $1.30, and peaked at $50 in 1980. But it took about 15 years to go from $1.30 to $6. And just for inflation, you had a real rate of return. However, if you were a rank speculator and knew nothing about markets, except you know there's nothing more bullish than buying on a new high, something that no one teaches, to buy on a new high. If you bought on a new high, which is $6, and held it for a year, you went from 6 to 50. You went 800% in 1 year. So you had to wait 14 years to get a measly percentage, and you could go in 1 year and make 8 times on your money. That's 90% of the move in the last 10% of the time. And I did the math or the arithmetic. It was actually, what was it? It was, I think it was 88% of the move in the last 7% of the time. But anyway, the general idea is what's important, not the exact arithmetic. So this is one of my speculations. There's a gentleman here in the front row that was associated with this company, and it's a technology company that I am the only one to really recommend. This company shows the difference between this technology of getting gold out of electronic waste. The company's gone from my 25-cent recommendation and spin out around 40 cents, if I remember correctly. Is that right, Leslie? It was around 40, I think. It was spin as high as $2. It's now at about $1.50, or actually $1.40. A major financing came in at $1.50, so you're buying it better than the banks did. And it shows the difference between mining gold from out of the ground, from mining it from printed circuit boards, computers, cell phones, and all these smart devices have gold in them. It's a far, far more lucrative proposition than any gold company I've ever been associated with. Again, I'm the only one that's talking about this. There is one technician that's talked about it from a technical standpoint. But this cyanide replacement will become better and better known. The company was at the Disrupting Mining Conference held by Gold Corp. I was there. They did not win, but out of hundreds of applicants, they were one of the 4 that were selected to present to the public. So I'm out of time. If you have more questions, I'm at booth 115. Thank you for your time.